Welcome to this Trading Success Zone video as part of the ETX Capital Traders Workshop. My name is Ryan Schofield and I'll be talking today about streamlining your trading process, making your stock scans, your FX scans a little easier so you can find those potential setups in a timely fashion. I often get that question, Ryan, how do I find trades? Now, we teach people to trade through ETX Capital. The ETX Capital clients have access to advanced education, and in that education, we do two strategies. Now, we're teaching you exactly how to take the trade, but people are starting to get to a stage now where how do I actually find the trade itself? So I thought I'd put this video together for you so you can help give you some things to think about here and how you can best plan your trading business. Now what we've got here is the ETX Capital platform. Okay, this is the normal dashboard. Now what I've done is I've created in my watch list, I've put in 9 very liquid and very tight spreads or currencies and the Wall Street. Okay, those are markets I trade very regularly, so I put them in here. Now what you will notice, okay, is that there is 9 listed that I look at for swing trading, and then there is one down here that I look at for intraday trading. Okay, this Wall Street daily future is my intraday market that I look to trade. The reason why it's my intraday market is because it's very liquid. It is from the CME, so I'm spread betting the Chicago Mercantile Exchange. Perfect, trading the Dow futures. You can see here that the spread here is currently 4 ticks. Now that is because the market is closed in the New York Stock Exchange. Yes, it's a 24-hour market, these futures. However, the actual cash market is closed. So during that time, the spread widens to 4 ticks. During the New York session, from 2:30 to 9 o'clock UK, this will come down to 2 pips. Okay, so very tight spreads for me to trade. So I won't be trading this outside of that time. So I've got nine asset classes and FX pairs that I look to trade on a swing trade basis. And why is that? Well, the reason for me choosing these guys is not because I'm emotional or I'm feeling the love for these guys or I'm romantic about them. No, you'll notice some of them are quite an eclectic mix. Aussie dollar, US dollar, euro, Swiss franc, pound, US dollar, Japanese yen. There is no correlation between which ones I've chosen other than their tight spreads. These are all 3 pips as a maximum. Okay, now the reason why that is the difference between, for those of you who don't know what I'm talking about, the difference between the bid and the ask price is a spread. Now the spread is a cost to me as a trader. Now you can see, if you look through here, you'll see that none of them are bigger than 3 pips. Okay, because that's a cost. I like my trading business to have low cost. So in a bid to do so, I trade the tightest, most liquid and highly volatile markets. That's what I do. Okay, it keeps me in the game and it keeps my costs down. So having a quick look here, you can see some of them 2 pips there, we've got 3 pips there, we've got 3 pips there, 2 pips there. These are tight markets, folks. Euro GBP 1 pip. These are very tight spreads, and I'm looking to trade those every day of the week if there is a good setup. Okay, so now we've only got 9 to look through. It's quite a simple process now. Now, I often get people saying to me, "Hey Ryan, should I subscribe or buy third-party software?" The point of that is there isn't a point actually. It's expensive, especially if you're doing this, if you're new to the markets and you're trying it out and you're gaining practice in your trading. It's pointless going out and getting expensive charting software. Those are just costs. Now you think about it, if you add any huge cost to your trading business, you have to have more successful trades in the month, which puts pressure on your shoulders to perform, okay, because you have to break even at some point. So I say don't do that. Why don't you use as much as you can that is free? And these charts here are free. So I'm going to show you an example of how I scan. I'll just start at the top, bang the advanced chart button right there, and I get this chart pops up. Now it pops up pretty quickly, so I'm happy with that. Now what I'm looking for is I'm looking for trends. Okay, you can see right here we don't really have a very strong trend. However, we do have a trend forming. We're making higher highs, higher lows. Any pullbacks into this region over here is a potential buying opportunity. Okay, so there is definitely something to say here on this daily chart. I'd like a bit more of a pullback into these moving averages. Maybe back to this parity level. You can see 1 there. This is a major structural level, folks. Look how the price has interacted with it in the past. So any pullbacks to here, be a good place to potentially look to buy at. Then I'll go down my time frames, looking at the lower time frames just to see if I can see any good setups. Again, this is starting to look a little bit messy. Okay, we've made a lower high right there. We've just broken down through the lows. So this looks like we're pulling back down into this overhead level here. this is a 4-hour chart, so I'm not going to look at the Aussie dollar US dollar again today because of the fact that this is going to take quite a while. If it's going to drift back down into these buy areas, it's going to take some time to do it, so I'll check it again tomorrow. Now I'll do this process all the way through these markets, just looking for a potential setup. Now the one that is actually looking quite good at the moment to swing trade is the Wall Street. Okay, let me show you what I'm talking about. So looking at this daily chart, and this is the reason why I use the rolling dailies, because you're able to swing trade it. You cannot swing trade that March or the March daily future because it doesn't roll over at the end of the trading day, because it's a daily future. It's not a rolling daily market. So you can see how we are quite extended though. We are making beautiful higher highs, higher lows. This is a very, very strong trend. To be honest with you, a little bit of a pullback or a pause to wait for these moving averages, not a bad thing before the next move up. That's healthy. That's how healthy trends work. You can see these examples of pullbacks into the moving averages as prices started to move out. Those are good and healthy for the trend to continue. So we are a little extended on the daily. However, if I get a good setup on the lower time frames, I'll potentially look to take it. Okay, so right here, I like to see this 4-hour pull into the buy zone before another move up. That's what I'm waiting for. So I'm going to keep an eye on this. I'm going to check it a couple of times during the day just to see if we get any potential setups here. Okay, 2-hourly chart, you can see high highs, high lows. Another thing that you'll notice is these big drives up in the trend have occurred during the New York session open. So it'll be quite interesting to see where this is sitting before the market opens. Okay, and check it during the trading day. So between now and then, I'm not going to be doing a whole lot. I'm just going to be sitting doing odds and sods, waiting for that market to open to see what kind of setups I get. Once that market opens, any trades I take, I'll open this guy, the daily future, and that'll be where I find my potential trades. Okay, and the reason why I say that is because this is the Chicago Merc. Okay, so we'll have a quick look at yesterday's trading session. You can see here, pretty much from the open all the way through to the end of the trading day was a beautiful, strong day, and any pullbacks into these moving averages, the market turned around at them. Okay, the market turned around and another big move happened thereafter. So that's what I'm looking for. I'm looking for areas right there where we get pullbacks, small candlesticks in the moving averages. If you don't really know what I'm talking about, well then why don't you come on our education course and we'll show you. Okay, it's free to all ETX Capital clients. It's a resource that is getting heavily used by the clients, and we're getting a lot of good feedback. So why not be part of that? Alright folks, so that's pretty much how I streamline my trading to make sure I'm not spending too much time scanning and messing around. You need this to be as simple as possible. Another quick little thing that not many people know is if you want to see, or not see for that matter, what trades you got open and your cash balance, you can close it. You can just minimize it there. So you're not sitting and watching the amount. You're not sitting and watching the ticks move and the pounds go up and down, because those fluctuations can really hurt. That's just a little thing. I like to keep it down. So if you find it quite interesting hearing a bit about the strategies that we do, then and you'd like to know more, come and have a look on the education section on the website. We do live webinars in London. We do live seminars in London, live webinars from anywhere, wherever you're based. You can join in on those, and we do the advanced education course. But for now, I just want to bring your attention to the live webinars. We've got some new topics which we're doing: swing trading versus day trading, and trading with a day job. These are some new topics that we've introduced right now. Okay, it's just helping those of you that are looking to find a way into trading. So come and have a look. It's free to everyone to join in. It's a lot of great information, and we're getting a lot of good feedback from it, and people are getting involved. If you are interested in actually learning about the strategies themselves, then why not apply for an account? It takes 3 minutes to do online, and you get quite a few benefits. A, you get access to that £500 worth of education, and B, you get a safety net, £250 worth of cover if you're not in profit after 10 days. So you got that safety net helping you. Okay, folks, find out more, check out the website. Also, you got to understand your risks. Spread betting is a leverage product, so you know your risks first before you get involved. All right, folks, have a good week, and hopefully this helps you streamline your business. And I look forward to speaking with you soon.